Every chart tells a story, and this one begins with a surprise. After months of gloom, headlines, and hesitation, British retail sales just hit their highest level since 2022. It wasn't supposed to happen. Economists expected another decline. Instead, the tills rang louder, powered by iPhones, gold, and a summer of cautious optimism. But behind this sudden surge lies a deeper question. Is this the start of a recovery, or the final breath before another economic storm? The UK's economy has been walking a tightrope. High inflation, rising taxes, and the cost of living crisis have drained household budgets and broken consumer confidence. So when new data from the Office for National Statistics showed a 0.5% rise in retail sales for September, the fourth consecutive month of growth, it shocked almost everyone. How can a nation under pressure, where families are cutting back on essentials, still be spending more? The truth reveals the strange psychology of modern economics. People aren't just spending out of confidence. They're spending out of fear, fatigue, and a desperate attempt to feel normal again. Since 2020, the British high street has been on an emotional roller coaster. Lockdowns destroyed footfall. Inflation crushed savings. And as interest rates climbed, even basic goods began to feel like luxuries. Yet despite the pressure, retail has quietly evolved. Consumers went online. Luxury items like gold jewellery, once symbols of excess, became safe havens during uncertainty. And every new product launch, like Apple's iPhone 17, became a reminder that people crave stability through small comforts, even if it comes at a cost. The Office for National Statistics revealed that sales are now 1.5% higher than a year ago, marking the longest streak of growth since before the pandemic. But here's the catch. Volumes are still 1.6% lower than pre-COVID levels. In other words, we're spending more pounds but buying less. That's inflation's invisible tax. We're paying higher prices, not living better lives. So what exactly fueled this surprising recovery? A few key forces aligned. First, technology. As the iPhone 17 hit stores, sales at computer and telecom retailers soared. Consumers lined up for upgrades, even as their budgets tightened elsewhere. In economic terms, that's called replacement psychology. People cutting back on many things to justify one big purchase that makes life feel complete again. Second, gold. When the world feels unstable, people don't just look for luxury, they look for safety. Online jewelers reported one of the biggest surges in demand for gold since the 1970s. Investors see it as a hedge against inflation. Ordinary buyers see it as a tangible store of value, a way to protect wealth when money itself feels uncertain. Third, fashion and weather. A warmer than expected summer, combined with the buzz of the Euro 2025 women's football tournament, drove clothing sales upward. People wanted to go out, to feel part of something again, even if it meant stretching their budgets. By late September, the cumulative effect was clear. Retail sales volumes rose nearly 1% quarter on quarter, defying every forecast. It was the economy's version of a heartbeat. Faint, but real. Yet economists warn, don't mistake momentum for stability. The same forces lifting sales could soon turn against them. High inflation continues to erode disposable income. Job growth is weakening. And the looming November 26th budget from Chancellor Rachel Reeves could bring new tax rises just as retailers prepare for their most critical season, Christmas. Retail analyst Nicholas Found from Retail Economics summed it up best. Shoppers are being deliberate, cautious. They're still spending, but every purchase is weighed against bills, mortgages, and uncertainty. This shift in behavior is reshaping retail itself. Luxury buyers are becoming selective. Middle-income families are prioritizing essentials. And businesses are adapting to a new reality where psychology drives the market more than pricing does. Because when people feel anxious, they don't stop spending. They just spend differently. They spend to cope, not to celebrate. As we head into late 2025, the UK retail sector sits at a crossroads. On paper, growth is steady. Online sales have risen for 8 straight months, signaling a long-term digital shift. Tech, jewelry, and clothing are holding firm. But the optimism is fragile. Behind the glossy shopfronts, retailers are preparing for what could be one of the most difficult Christmas trading seasons in years. Discount wars are already brewing ahead of Black Friday. Margins are tightening as businesses try to survive, not thrive. And yet, amidst the pressure, there's resilience, the kind only born from years of crisis. After surviving Brexit, COVID, and inflation, Britain's retailers have learned to adapt fast. From smaller stores to flexible e-commerce and sustainable sourcing, they've quietly rebuilt the foundation of an industry too often written off as dying. The question isn't whether people will shop this winter, it's how and why. There's a paradox at the heart of this story. Rising sales in a struggling economy don't mean prosperity. They reveal human behavior at its rawest. When faced with uncertainty, people don't always save more. Sometimes they spend, not because they can afford to, but because they can't afford not to feel something. Buying a phone becomes a way to regain control. Buying gold becomes a vote of confidence in survival. Economists measure numbers, but what they're really seeing is emotion, hope, fear, and the fragile balance between them. In times like these, spending isn't just an economic act. It's psychological self-defense. So yes, retail sales in the UK are up. Shoppers are out. The tills are ringing again. But this isn't a boom. It's a balancing act. A nation trying to find joy in the cracks of its economy. A society learning to live with uncertainty, one small purchase at a time. Because in the end, every transaction tells a story of resilience, of adaptation, and of the human need to believe that things will get better. The numbers may rise and fall, but the emotion behind them, that's what really drives the market. Subscribe to InnerEconomics for more cinematic stories about money, behavior, and the invisible systems shaping our everyday lives.